Welcome back to the Big Show, Investing and Trading Live, sponsored by Online Trading Academy, talking about the do's and the don'ts of the stock market, options, futures, forex, income strategies, and wealth strategies. We have local academies. If you're listening to the show, we have a class near you where we have investing classes to teach people the skills and techniques and how to get in the financial markets safely, but also confidently. You can text right now. Text the word investing to the number 210-210 for 2 free tickets. Text the word investing to the number 210-210 right now. In that, when you get set up, you're also going to receive a quick start kit. In this kit, there's some content that'll actually help you get started right away. So if you're brand new to the financial markets and you want to learn how to get started, you can receive that quick start kit just for getting set up for this investing class. So, Al, we've been talking a lot about income strategies. We did talk about wealth strategies as well. Now, I want to talk a little bit about all assets because we have strategies. You know, most people think, okay, I only need to trade stock or I only need to trade forex or futures, whatever that may be. Why is it so important to understand correlations in the financial markets, whether it's futures and stocks? Or inverse correlations, let's say. Right. Why is that so important in these other assets?
Well, one of the things you want to do, we talked about protection before, and one of the ways that you have protection is to have a number of different assets that aren't all correlated to each other. If you are in stock, for example, or if you're in mutual funds, they're all stock. They're all part of the same asset. So when the market does crash, when we go through a correction of 10% or more or a bear market of 20% or more, the correlation becomes very high, and all of the good companies or most of the good companies kind of get taken down along with the bad ones. So that high correlation really leaves you in a position where you're probably going to have a big hit to your portfolio. If you have assets in there that are not correlated to each other or inversely correlated, for example, if you have something that goes up when something else goes down, they kind of balance out each other there. There are things that are correlated to each other where if you watch one particular asset go up in value, another one should probably be going up at the same time or may catch up to it. So there's a way of using these different assets that are correlated, non-correlated, or inversely correlated to properly manage the portfolios that you have.
Mm-hmm. So when you understand that, it adds more odds and probabilities in your favor, right?
Exactly.
So talk a little bit about these other assets we're talking about. We never really got into what futures are and forex. What exactly are those? And that way our listeners understand, okay, well, this asset is not going to be correlated to this because of these reasons.
Well, futures is a family of things that you can invest in that provide probably the best combination of things where you're not all correlated. In the futures market, you're looking at trading the major stock markets, the Dow, the NASDAQ, the S&P 500, the Russell, some foreign markets. You're looking at currencies.
Don't forget my favorite, Al.
I'm not going to forget your favorite, which, of course, is
lean hogs.
Lean hogs, that's part of the commodities market, so you can trade commodities. And there are a lot of things that are available there that have no correlation or no commonality with the stock market, for example. You can trade oil. You can trade the precious metals, gold, silver. You can trade currencies. You can trade interest rates. So you have a lot of choices there, which really gives you the potential to have a really well-diverse portfolio. And that diversification, that's one of the things that Wall Street is going to tell you will protect you, but their diversification is just within one asset. That cannot protect you. It might mitigate somewhat the downward movement, but it also mitigates the upside movement. But true diversification are using assets that, as I mentioned, are either not correlated, inversely correlated, or correlated, a combination of those.
Yep.
So that's part of how you create a potentially better return for your portfolio, how you also help to protect it. But within the futures market, you have all those choices. You're basically saying you think something's going to be worth more or less in the future. You can buy, you can sell futures contracts. Trades almost 24 hours a day, has a great tax advantage, in which we talk about in these classes. The foreign exchange market, you're looking at the difference in exchange rates between two different currencies. A great asset to trade with high leverage, trade 24 hours a day. And you can use those both in a short-term and a long-term strategy. And then options is where you're trading a contract on something like a stock, for example, or it could be a futures contract or a Forex contract. We talk about these assets in the class and show you why they're so valuable, why the pros use them. Every pro out there, every hedge fund manager and every professional trader uses one or more of those assets to really boost their returns and protect the assets that they have.
Yeah, that's pretty cool because, I was actually talking with some friends over the holiday weekend, and we were talking about the stock market, and one of them said, oh, boy, I would never get in the stock market right now. It's been crashing. Why would I do that? Well, that's a great thing, is you have other markets out there. Right. You have the futures market, or corn really probably has nothing to do with the stock market.
Correct.
Oil kind of does, kind of doesn't, but there's really correlations or inverse correlations, so it doesn't matter what the stock market is doing. That's the great thing about these other assets that are available to us, the public. So, and you talk about that a lot in these investing classes. Why this does this? Why this does that? That way our viewers and listeners understand, okay, what are the other options I have out there? And this key word that you brought up, Al, it gives more people choices. People like choices in their financial future. So if you want to come in one of these classes, we have these classes locally here. Text the word investing to the number 210-210. That's text investing to the number 210-210 right now for the 2 tickets. You and a spouse, and there's also a quick start kit that will help you get started right away in that when you get registered for this free class. So, Al, we've been talking a lot about this investing class, and we see a lot of people that come to the Academy, all types of people. Talk a little bit about who comes to these classes that we have here at Online Trading Academy.
Well, you really said it right there. All types of personalities. We see pretty much everything from teenagers up to people who are in their 80s or even 90s. You know what we're also seeing a lot more of, Josh, are women. And I don't know if it's because they're coming in to see if we're as good looking as we sound on the radio. Well, I'd like to believe that.
They might be unimpressed.
We have some disappointed women that come in here. But here's the bottom line. Women have about 30% less saved by the time they retire than men do. So a lot of them are waking up to that reality. The truth is that women typically retire 2 years younger, and they live about 5 years longer than men. So that the math doesn't work out in their favor there. And in some point in time, because they typically live longer, they're going to be the sole financial decision maker in their life. And a lot of women are coming in now because they want to know how the markets work. They want to know if they can use them, how they can benefit, and how they can protect the assets they have. Maybe they had a spouse that passed away and they have an insurance policy and they want to be good stewards of the money that they receive from that insurance policy. But we are seeing more women come in. But regardless of what your story is, regardless of what your goals are, there is a strategy and there are assets that are right for you or that are better suited for you.
Yep.
So we really take that responsibility of identifying more about you and what your goals are so we can help you bridge the gap between where you are now and where you want to be in the future.
Yeah, and some of the things that we're looking for here at the Academy, because there's some different characteristics that I feel is necessary in trading and investing. Yep. You got to be coachable. What we teach, as I mentioned earlier, you got to be very careful with what you watch online on YouTube and all that junk that's out there. So what we teach, it's not on YouTube. It's a proprietary strategy that comes from the floors of the exchanges. Most of our instructors, we got about 60 of them now, right? A lot of them came from the floors of the exchanges, the New York Stock Exchange, the Chicago Mercantile Exchange, the Chicago Board of Options. So you have to be willing to learn, not something new, just a little bit different. And that's the key, is being able to be coachable to learn that strategy. Then you got to have some discipline, which means, what we have is a step-by-step approach to the market. And we try to simplify things in your decisions. And it's just step by step. So essentially, if you don't follow it, it's not going to work.
That's correct.
So you have to have some discipline because you actually hold yourself accountable in your trading decisions and your investment decisions. The last one, which I think is actually probably the most imperative, is you need to be decisive. What's that one thing that people say when they don't want to make a decision? I got to think about it, right? Well, nobody's going to think about it. That means no. I told my son that. I said, he goes, okay, can we go to the park today? Oh, I'll think about it. Why not? Because that's what it really means.
Yeah, as you're thinking about it, there goes the opportunity.
Exactly. You have to take advantage of those opportunities when they're there. The old word "pour." What does it actually mean? It means passing over opportunities regularly. So you got to be decisive, and we do have that opportunity. We have one last opportunity for people to take more action in their financial future. We have an investing class local here at our academies at Online Trading Academy. Text the word investing for 2 tickets to the number 210-210. That's text investing to the number 210-210 for this opportunity to see how these markets work and hopefully make better investing decisions moving forward. Al, it's here today's OTA Tip of the Week.
Well, a lot of people are unhappy with what's happened, but you have to understand you can't control what has happened and change the past. JFK, and for you younger listeners, that's John Fitzgerald Kennedy, who was our 35th president, said this quote, "Let us not seek to fix the blame for the past. Let us accept our own responsibility for the future," unquote. Remember, people don't decide their future. You don't decide your future. You just decide what you're going to do today, and that decides your future. Trading really is somewhat similar to sports, where the top 10% are the most successful. To get to that highest level, you have to do things differently than the majority that typically settles for average, and you have to do what the top performers do. You'll be surprised at what you can accomplish if you just have the courage to try.
Yep, courage is that thing, and it just takes that first step. That first step is this investing class. Text the word investing to the number 210-210 for 2 free tickets. Make sure to follow the podcast, Investing and Trading Live, wherever you listen to podcasts. As always, same time, same place next week. Until then, retire young, my friends.